Hi, I'm Stewart Oldmeadow.
I'm Paul Evans.
And I'm Jessica McFarlane-Ogden. Welcome to the Miles Market Update.
We are thrilled to be celebrating our 100 years in business this year, an achievement we feel immensely proud of and very humbled to have had the privilege of serving the local community for more than a century. We've also expanded our sales team and have welcomed 5 new agents into the fold, including a new partner in Gordon Hope, a very well-respected, successful agent and a wonderful auctioneer throughout Banyule. Interest rates have remained steady as sellers and buyers return strongly to the market, and listings have continued to increase significantly in the first quarter of 2024. Melbourne saw its busiest February in over a decade, as increased certainty around market conditions is boosting seller confidence. This has continued well into March, and we have had many more properties coming to market as we do over the next 6 weeks. The median Melbourne house price gained 2% in the last quarter and is $929,000, up from $911,000 at the end of 2023. The median house price in Banyule is higher at $1,122,500. In Ivanhoe, houses are up 11%, Ivanhoe East 9.6%, Viewbank houses have increased 6.5%, and McLeod is up 11%, largely due to the quality of the stock that has been on the market throughout Banyule. Auction clearance rates remain steady, with an average of 75% for Melbourne in the first quarter, showing that buyer confidence is strong.
Stu, you mentioned interest rates. What's the outlook here?
Well, the property market is no longer expecting any further interest rate rises. And if anything, there's an expectation of a rate cut in the second half of 2024, as inflation figures are holding back into the RBA's targeted range between 2 and 3%. This will further increase the buyer activity towards the end of 2024. In the last 3 months, we've had nearly 4,500 buyer inspections for the 107 properties that we've sold in this time frame.
That's an impressive start to 2024 for the residential sales, and the team have achieved some great results too.
We've had a number of wonderful results in the last month or so, Jess, you're right. So we've had 45 Outlook Drive, the historic Walter Burley Griffin home. We've sold that to a wonderful local family. We sold 10 Ferry Street in Ivanhoe, swiftly off market. We've had the wonderful renovated home at 88 The Eyrie in Eaglemont sold. We've had 3 Waterdale Road in Ivanhoe and 32 Glen Drive in Eaglemont, all terrific family homes in wonderful locations. So Paul, tell us how the commercial and industrial market is faring for 2024.
Thanks, Stu. With the anticipated smoothing of interest rate activity, as you'd mentioned, investors are definitely out and about in recent months, but with a very discerning eye for quality stock. Second-grade properties are struggling against blue-chip opportunities, where some long-term investors are enjoying less competition in acquiring these sites, which have obvious long-term upside. Increases in land tax are motivating some investors to convert their holdings into fewer larger assets rather than owning a suite of smaller investment properties. Therefore, smaller portfolio holdings with fewer properties but with higher value assets, with a renewed trend towards industrial sites.
That's an interesting development and goes to show you how investors' behaviour is changing in light of increased asset taxes. So Paul, what's on the market?
Several properties being offered at present, including the Ivanhoe Medical Centre, 1,780 square metres of general residential zone land, returning $270,000 of gross rent, with an anticipated sale price in the vicinity of $5 to $5.5 million, about a 5% return. We also have 7 Rose Street, Elphington, going to auction in early May, returning $80,000 a year on a new 5-year lease plus options. The corner property operates as the Elphington Social Club, a bar and restaurant, and is directly opposite the Elphington train station. A great investment opportunity with a big population boost in Elphington due to the development at Yarra Bend, with 2,500 new dwellings by 2025. Recent sales include 103 to 107 Lower Plenty Road in Rosanna, which sold in the vicinity of $3 million. That incorporated Australia Post and Rosanna Pharmacy as blue chip leases, and that reflected a yield of sub 5%.
That's a great result, Paul. From the leasing side of things, how would you say this part of the market is performing?
Leasing inquiry is steady at present. Industrial still chugging along very consistently, while retail is moving if solid incentives are offered to tenants on reasonably strong lease terms. Jess, it's also been a busy start to the year for the Miles Property Management team. What's been happening there?
Thanks, Paul. Yes, low stock continues to challenge the market with high competition amongst renters to secure property. As a result, fewer renters are moving out of their existing homes, and Melbourne rents have increased on average $65 per week. And the average rental for a home is now $560 per week, which is an increase of more than 13% in 12 months. Our arrears and vacancy rate continue to stay well under 1%. Days on market has also been low at 16 days on average this year.
That's an excellent start to the year, Jess. You've had some good numbers in terms of inquiries and applications too.
That's right, Stu. Since the start of the year, the Miles team have leased 185 properties, hosted 546 open for inspections, received over 1,200 rental applications and fielded over 1,500 inquiries. We leased 424 Lower Heidelberg Road, Eaglemont for $800 per week, 12 Macrae Road, Rosanna for $750 per week, A501 at 111 Parkview Road, Alphington, also leased at $800 per week.
That's very solid in terms of rental yields. So what does this mean for investors over the next year or so?
Despite land tax increases, there are still great incentives for investors to stay in the market, as the vacancy rate will remain very low for years to come. House prices have risen 2% in 2024 and are forecasted to make more significant gains in the next 2 to 3 years. And yes, rental yields will continue to grow amid stiff competition for property.
As we move into our 100 years in business, we'd like to take this opportunity to thank all of our clients for choosing Miles.
And we would also like to thank our staff for their loyalty. We proudly have one of the lowest attrition rates in real estate.
Please get in touch with us to discuss any of your real estate goals for 2024. We'll be more than happy to assist. Thanks for listening.